Morning, everybody. Good morning, everybody. It's a new week. Jumping into the market, seeing what's going on, getting prepared for the remainder of the week. Drop some tickers in the chat if you want to pull up individual names. We're going to first look at the market, see how everything's going from an absolute perspective, from an inch market perspective. And then we'll go from there. This is my first time being live on TikTok. I don't even know if I'm doing it right, to be quite honest. But if you're in TikTok, welcome. You're on my very first live stream there. I'm also here on Twitch, and I'm on YouTube. You. Welcome. Welcome, welcome, welcome. Michael Harris, welcome. Good morning. Grit and Grunt. Waka waka. Welcome, waka waka. Good morning, Bobby. Good morning, Dijan. How you doing, man? Good morning, Tulip. Good morning, FT Trader. Good morning, Palm Tree. Good morning, everybody out there in the Twitch sphere. We're gonna start off looking at the S&P 500 and kind of go from there, okay? I got another monitor set up, so bear with me here as I'm trying to navigate my new setup. ATAI, yeah. Drop the tickers in the chat. Just put the ticker and then the time frame that you want me to do. So for example, if you want me to look at the daily time frame, just make sure to type in the ticker and then give me and then just say daily or something like that. Or like 15 if you want me to show the 15-minute chart or so forth, and we'll go through those, okay? I'm gonna start here at the S&P 500, and we're looking at the 15-minute time frame just to get a good idea, because there's been a lot of volatility in the markets, shaking people up, right? And a lot of people expected a bounce, and the bounce came. Right? That was not hard to forecast, right? When you get some super big price action to the downside, it's very likely to see volatility from both directions. This is very common. I've showed many charts depicting this through bear markets, through bull markets, mainly bear markets. Is when volatility increases, you have a rate of change to the downside, rate of change to the upside. Big swings both ways, boom, boom, boom. But now we have to be a little bit more patient and watch where price digests, okay? So if we look at the S&P 500, we saw some volatility come in here, okay? We had this low point print come in right by the quarter, quarter to date. Sorry, the lower quarterly expected move. That's an expected move based off of implied volatility. All right, these aren't levels on my screen that I just draw. These are what the options market priced in. You can see price came down to in the very first month of the quarter. Okay, and then we're way outside of the monthly expected move, and we bounced back into that coming into the end of the month, right? Not surprised there. That's likely to happen. If you're thinking in terms of probabilities, it's likely to see that stuff happen. Now, what do we see happening on the shorter time frame? You see a low, you see a higher low, so that's positive. You see a high, higher high. So now we're starting to trend up. Now the price action here itself has gotten pretty extended, and we haven't really seen it quite yet digest. However, we're back above the rising 5-day moving average, and that is a positive sign. So overall, when I look at this, these are positive signs taking place, and it gives us an idea for risk if you go along the market. If you're going long over here, you want to be able to hold this low and this low right here, okay? Now, as far as the week goes, we have an expected move of 516.62 to the upside, 499.90 to the downside. That's what the options market is pricing in for this week. And these are based off of implied volatility. A lot of money traded in the options market, and these are, you know, it's if you think of it in terms of distribution curve, right? 68% of the times it closes within, and it's even more frequent that it tags one of those levels. So come this week, we could probably easily tag the upper and or the lower. We do have some catalysts today. Not much going on today, okay? 8:30, we have some bill auctions. Tuesday, we have some unemployment stuff. We have Case-Shiller, Chicago PMI, Wednesday, ISM, jolts, and then we have the Fed interest rate decision. Now, the Fed interest rate decision come Wednesday, they're not doing a dot plot, so that day is going to be heavily focused on
publication of cancer immunology research, preclinical data.
That day is going to be heavily focused on what Jerome Powell has to say
November.
in the press conference. Okay.
Axel Springer and Microsoft expanding a partnership across advertising, AI, and Azure services. Michael Sierra, Franklin Tango, and Axel Springer.
Yeah, I'll go over the gamma flip lines and everything. Welcome everybody in the live stream over here on TikTok. There's 1,000 viewers on TikTok. What is going on over there? Can anybody is the comments working or chats or anything like that? Is anybody chatting in TikTok? Can anyone please give me a cute pets in profile? Oh, spam, bro. It's all spam. All right. You want to take a look at Visa? Dijan? Yeah, cool, for sure. China, we'll take a look at China. Gamma flip line. VIX is still dumping. Is the VIX dumping? Because from what I saw this morning, 1 month was above 3 months still. Okay, we'll go over the daily time frame too on the S&P 500. Before we do, let's take a look at where gamma is. Okay, the gamma flip line. So not only are we above a rising 5-day moving average, we're in positive gamma territory. So this is the flip line. It's currently at 50.97, basically 5,100. Okay, we're gonna just round up. We're gonna say 5,100. So being that we're in positive gamma territory in the S&P 500, this is where dealers look to buy the dip, sell the rip, buy the dip, sell the rip. When we're below the gamma flip line, that's when you get a lot more volatility, and you can see that here on the screen. You get selling into selling, buying into buying, selling into selling, buying into buying, and you get much, much, much more volatile price swings. So not only are we above a rising 5-day moving average, we're in positive gamma territory, not by much, and there's a big catalyst this week, so we'll see how this kind of shakes out, shakes and bakes, and if this ends up being a nice little tradable bottom back up into the all-time high for the S&P 500 and potentially even up into that 5,300 where traders were reaching out for. Now, I want to also cover something very interesting as we're coming into this Fed interest rate decision. If I look at the book map and show you some hidden levels that you can't see on a candlestick chart, there is a level up here at 51.85. There's about 400 contracts. So this is, the longer these levels stay here, the more likely they are to fill. Now I say that because if I zoom way down, take a look. This order's been here now for about a week or so. They were in last week at 49.62. There's 1,950 contracts. So 1,952 contracts sitting there. That is incredibly large and a big player right down there. So the longer they stay there, the more likely when price action starts selling off, they're going to start looking for buyers, right? Where's the demand at? And there's a lot of demand down in this realm. So this will be a very interesting level. I've seen these type of things happen before, both to the upside and the downside. And you forget about these levels, but they just remain there for weeks, maybe even a month sometimes. It's pretty crazy. And then they eventually get filled. So that level down there, don't be shocked if we get filled here and within a month, right? Within a couple of weeks. We don't know. But that's about 100, 200 handles lower. As of today goes for the S&P 500, it's been rather choppy as we're coming into some big macro decisions. I'll take a look at market net flow, and market net flow is not giving us an edge here. It's more bearish than anything today. You have the cumulative net premiums of puts above the cumulative net premiums of calls, and when that is the case, that means there is a bearish divergence. And then you look at the convergence to see if it is converging or not. And right now, currently, it kind of is, which tells us that the dealers, it's if you were trading with the market, it'd be more to the downside. If it turns gray in a bearish divergence, you'll have, you can have contra moves. So as the market is showing us that, from that perspective, it's kind of coming in a little bit, but not by much. This is also known to be just kind of choppy territory, okay? Okay, choppy territory. Yeah, I'm actually kind of curious if I gotta pull up my TikTok to see if I'm actually live. Like on my account, it doesn't show that I'm live, so I'm very curious to know. Am I live? Like on my profile, it doesn't show me live. But on here, it says that I'm live with like 1,200 people. Very crazy. Very crazy. I just don't see any comments coming through. It's very, very weird. I see a lot of people joining, just no comments. Okay, that's fine. It is what it is. All right, yeah, Wednesday's Fed. We got that. All right, so the market's coming in a little bit here. We'll pull up some individual names, see what's up on the radar. As far as some interesting names today, right? Tesla. Actually, before we get into that, I want to show, because I'm not going to be live too long today. I guess I'm going to do it at 10 o'clock. 10 o'clock. As far as earnings go this week, exit out of that one, bring up this one. We've got on deck PayPal, McDonald's. Okay, those aren't really market movers. So let's focus at the bigger market movers. We're looking at Amazon. AMD could be in there, but it's not. When you think of terms of market cap, I think that now a lot of the markets move on the reaction to various names, so they can potentially create some sort of momentum. Think of it as like an avalanche, right? Or a snowball rolling down a hill, it gets bigger and bigger, right? There's a lot of cartoons. So perhaps, but Amazon's the bigger one. And then we got Apple as well reporting this week, and a couple other big names there too as well that are interesting. We could always take a look at what the expected move is for earnings as we get closer to them. What's up, AA? Good. Morning, Gigi. Good morning. What's up, River? Yeah, I'm live out here on YouTube. The tube of you. The YouTube. All right. Make sure to drop your tickers in the chat. I'm going to be writing them down now. I'll pull up a Tesla. I'm going to go like through the Mag 7, right? Mag 7, which is just the bigger names. So don't worry about that. I'll get those. I know that Visa was one of them. What else we got here? Yeah, PayPal's been looking pretty decent. I'll pull up a PayPal chart. It's been, I mean, it's by decent, I mean, it's been kind of like basing out and it's been showing a little bit of strength, right? I'll pull up some of the names that are on my tight list.
Or Shell reportedly to deliver
Melly,
2
I
million
haven't heard that
barrels
one
of
for a minute.
excess
That was a decent one. Yeah.
Western blend crude to Reliance in July for its first Canadian crude to load from the new Trans Mountain Pipeline.
Okay. We've got Intel. We've got CGC. Is that Canopy Growth, right? GDX. Actually, I'm kind of interested in Aurora Cannabis again. I want to see that too. Do, 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 do. All right. Hey, MC Cheeks with the $2 super chat. Thank you for that. And thanks for teaching so much throughout the years. Thanks for being here throughout the years. That's appreciated, man. Thanks for supporting the channel. All right. Pull up some of these names here. Hoover's like, I haven't heard of Canopy for a while. Yeah, I know, it's been a minute, huh? All right, I want to look at the S&P 500 on the daily time frame. We're going to look at the SPX. Do you see all these white lines on my screen? Do you see these white lines? Remember this from the stock market brief show? All these white lines? And look at, see this white line right here when we marked it out again? You guys remember what that's from? I'll show you if you don't. So if you are looking at gamma, and you go to a time series, you go through history of this, and we've been in, negative gamma, and this is when we're in negative gamma. This is where you can see selling into selling, buying into buying, much more volatile price swings. And we basically just marked out on the screen all these times that we're in negative gamma territory, right? If you're looking at this and you see the light green, this is when you're in positive gamma territory, but down here is when you're in negative. And that doesn't mean that market sells off. It just means that you get much more volatile price swings. And when we started extending down here, we noticed that if you go back through history, when we get this much into negative gamma territory, you can see potential snapbacks. And sure enough, that is what we saw here. You can see right here, we marked it, came down a little bit more, but then we saw this pretty big snapback. Now, when I'm pulling up the SPX, let's pull up the SPX. Hey, if anybody's in the Twitch right now, can you just tell me that if you are seeing the video that's live right now being streamed? Because on my end it cut out. Okay, thank you. Okay, sweet. Thank you. Hey, dude, Ramon. So you can say, okay, now I got somebody that can reach out and tell me how this looks on TikTok. I got a buddy that's on TikTok right now. So the chat clearly works. So does the liking work? If you can you press the like button? Because there's like 1,400 people in this dang thing, and I'm not seeing any chats. I'm not seeing anything. I saw yours just come through. I mean, that's a pretty large stream right there for TikTok. Okay. Tickety tockety. I got to do vertical video on TikTok, I think. It says 6 people. Oh, shoot, on my screen, it says 1,400. Maybe that's just people that are coming in and leaving. Maybe that's what it is. Okay, S&P 500. Let's take a look here.
In the U.S. bond market, Boeing is reportedly seeing up to $77 billion in demand for its 6-part bond sale today. Bravo Alpha.
Morning, Doppler. They're robots. Yeah, I think so. I think that they are. All right, so the SPX, the level that we were looking at for this potential bounce was coming back into and around where we currently are. So you have this little trend line where you're kind of matching up here, and then we're coming back into the 50-day and the declining 20. And we haven't really got to see any sort of consolidation at all. So, it's kind of, it's more of just a holding period when I look at this. I think that the right things are currently happening. The right things are taking place. It's just you also are coming into a period where you have a lot of uncertainty. You don't know what Jerome Powell is going to be saying. I think that if we can hold the swing low anchor VWAP from here and the swing low from here and the 5-day moving average, so all in this area, I think this is a pretty positive state. So if we can kind of consolidate and come down, it'd be pretty good. But I don't know if the market's going to allow for that right now. So that's if we do get a pullback, I'd be looking to buy the dip a little bit lower. I traded up and around here, and now I'm kind of just more waiting as far as size goes for the S&P 500. Let's pull up some of the individual names. We're going to start off with the Mag 7. So we'll start off with Microsoft. Microsoft's down. I mean, look at Microsoft, right? The largest market cap name in the S&P 500. Not only do we have this big gap up on the whole Meta earnings, right? But now we're sinking right back down. Down 1.22% today. You have, and look at what's happening. So you have these big dogs kind of right in the red, and what's up big time? It's Tesla and Apple. But what's been down all year? Apple. Right? So you're getting this snap move there in Apple, and you're also getting, maybe these are short coverings, snap move in Tesla too. Look at Tesla's move. And you look at Tesla on the weekly time frame, it kind of came into that, from pandemic low to the 2022 low right here. And we came right into it. Now we're seeing that kind of snap, boom. Now, what does this mean? Is something to get super excited about? I don't know. I don't think so. I think it's just coming back into another swing, a lower high. But that means that there's still opportunity to potentially get up to 200, 210, 215, somewhere around in those areas, and then see what it consolidates and how it kind of manages up in those areas. Apple, still nothing. Look at this. Look, how are you supposed to trade this? We traded this little pop right here, boom, boom, nice little move, and then it faded, and now it's right back up. So very, 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 very just kind of wild, crazy price action as we're kind of moving into earnings. Tesla earnings. When's Tesla earnings? Tesla reported earnings. Okay, yeah, duh. All right, Nvidia. Nvidia is the one that's going to have earnings in a little while. And Nvidia right now, this was a huge day in Nvidia. Okay, and now what are we doing? We're just kind of consolidating. Another inside trading candle. So if Nvidia is going to pick up some steam, Nvidia has the higher implied volatility. It's the third largest name in the S&P 100, S&P 500, right? As far as market cap, this one has a lot of weight. So if this is going to start to break out to the upside and maybe go retest for these swing highs or potentially even to 1,000, that's going to really help the market. So if you are going to trade this and looking at this, you'd want to break above the high of today, tomorrow would be ideal. And you want to stop below the low of this daily candle and or the low here. So Nvidia looks really strong up into the point of just breaking down, obviously, the low of today, but contracting, right? So if I go into the 15-minute time frame, we're also back above a rising 5-day moving average here too as well. Here, Ramon. I would also do that. Sheesh. Weekly Apple candle looks bearish. Yeah, I mean, it can look bearish if it closes down here like a little shooting star candle, but this big gap up is like, that's what's kind of crazy to me. All right, so Google also obviously. Oh, sorry, yeah. When I said Meta earnings, I meant Google earnings on that big move up. My bad. So Google, huge move on earnings, and now it's coming back in. Now this right here is where opportunities set up, right? So you get this huge move up. Now you wait for the consolidation and tightness to occur, and you'll probably play for a swing high again at some point. So Google would be an opportunity to keep on the radar. A lot of earnings seasons, or when earnings seasons is around, you look for these powerful earning gaps. Boom, you get big moves. Right, I would like to have seen, it look like this, not close like more there.
Italian
that's fine.
energy ministers
When you get
noting that G7 energy ministers are still discussing potential restrictions on Russian liquid natural gas imports.
When you get a
Coming
strong
from the
move on
Italian
earnings,
energy minister.
it sets up where you can have potential consolidation, you have volume dry up, and it sets up for a potential another move to the upside to claim these highs. We trade those very frequently. Yeah, we're 2 hours into the week. Yeah, exactly. What's up, Red 5? All right, so I want to take a look at the, I guess we'll look at Amazon. Amazon's reporting earnings this week, so once again, you have this like big gap down, but a big old snapback move. You have earnings. When is earnings again on Amazon? It's tomorrow after the close. We're looking at about a $14 expected move. All right, $14. So you can see it right back down here to these swing lows, or you can see it. I mean, you'll see it back up here at all-time highs. So big move there in Amazon, and Amazon can definitely move markets. So that's going to be an incredible one to watch. Not only do we have FOMC and a lot of macro data coming out, we have some big earnings, right? So another big earnings week. So just if you think you know what's going to happen next, man, we could be surprised again. Meta was the one that really cracked lower, and we're still trading outside of its earnings expected move, but we're kind of just consolidating there. Now, when you have a bearish earnings gap, you typically get followed through to the downside. You get, pullbacks up, right? This is a pullback, right? And then you can have follow through to the downside. Very similar to how we just said, if it's bullish, you can get moves down, right? Volume drying up and then a follow through. Well, if you get a gap down, you can have moves up and then a follow through too. Visa. Looks like it has a dividend coming up. Visa, what a reversal on Visa. So look at here. So this was the earnings expected move, and this is why they're so important. Take a look here. So you report earnings, and then look at where it came to. Ha! Literally tagged it to a T and reversed completely on its face. Now, that's not always the case, but it tagged its earnings expected move, and it came down, and now it's just kind of consolidating. So I don't really like the look of that reversal there on Visa. I would want to see... And if you look at some of these candles, like, holy cow, like, you get these large moves up, and it's basically the high of day, and it closes lower and lower. And these are distribution type candles. You get higher volume than the day prior, higher volume than the day prior, higher volume than the day prior. All right, some of these candles are just wicked. So I'd prefer, if I'm trading Visa, I'd want to see price action tighten up a little bit here, but these down days, it's like you can be up for, doing good, and then all of a sudden you get one down day. It's a little too choppy up here for me.
Communique will mention nuclear energy.
Look at the weekly
and
time frame.
biofuels.
The weekly time frame takes out a lot of that noise, and you'll notice here on the weekly time frame, this was a nasty weekly candle over here where you're on a move up. You get these highs and it closes at the low, and then you get followed through to the downside. And then look at where price came to. It came back and tagged, right up here, which was the earnings, happened to be the earnings expected move. Now, when I'm looking at this, I mean, the weekly time frame doesn't look all too bad, right? You have
President Biden speaking with Lopez Obrador of Mexico. The reportedly two leaders directed their teams to reduce irregular border crossings. This is after a phone conversation yesterday. Readout coming from the White House.
So on Visa on the weekly time frame, so you can minimize some of that noise, you had a pretty solid breakout here. And then this run, right? We ran on this monster run like the market did. And now we're consolidating for 1, 2, 3, 4, 5, 6, 7 weeks or so into earnings. So, I mean, if this can consolidate a little bit more and pull back a little bit deeper into like the 40-week, 30-week, and then start to see strength, I think that opens up a good opportunity. And even if it were to come down even deeper, I would pay attention to 250 if we start getting hit more to the downside. Now, if we don't make it down there and we start turning back around, I mean, that could open the door for some continuation. But the longer we consolidate, the more that these are going to start catching up with price. Now, we're below the 10-week, which happens to be the 50-day too. So if we start turning up back through that and it starts flattening to going up, that'd also be a little bit more positive. You can also watch the MACD, see if this starts turning back up, like give us insights to some strength right there. But right now, it's pointing down, a good spread. So the price action currently is kind of just drifting lower here. All right, let's take a look at PayPal. Yeah, PayPal is getting some nice moves here, some good follow through, breaking out of this little downtrend. Does have earnings coming around the corner here. So we see a low, a higher low, a higher low, a higher low, and we're kind of matching highs right around the 68, 69 kind of pivot area. And now we're already seeing a pretty strong move, so I'd like to see this tighten up, but we have earnings, right? So earnings is when? Tomorrow before the open, okay? So we can get a more accurate, we're looking at roughly about a $6, $5.94 expected move. So if I do that from where we currently are,
So if I say they're benefiting from strong deposit growth.
we're looking roughly at this as far as the risk going into earnings. I'm going to remove some of this stuff here. How do I remove that? Okay, so right now when I'm looking at this, right, we're a little frothy right now in the price of PayPal, so I'd prefer to see it consolidate and pull in. But not only that, we have earnings, right? And it's looking like we can get up to 72 or even down here at 61. So how do I approach this? I don't trade into earnings. When I like this chart, though, I get prepared for when earnings reports. Now, when I look at this from a weekly perspective, right, price action's getting above these 30-week, 40-week, 10-week moving averages. It's been going sideways for quite some time. Is this an accumulation period where we eventually move into a stage 2 markup? And I think it's setting up potentially for that as being a possibility as a 30-week is crossing back through the 40. The 40-week, which is roughly the 200-day, is still down, right? But what I would like to see now is when earnings come, if we do get a bullish earnings move and we see a nice big candle or whatever it looks like, maybe it looks like this, then I would say, okay, now once we have a big bullish power earnings gap, then I would say, okay, now I watch for the consolidation and then I play through the follow through. Because I don't care about going into earnings and maybe catching a move up here or, you know, potentially here. It's too binary for me. And I'm not going to put my money at risk. And a move from here to, even if it's a 2 sigma move, like, okay, 20%, okay, whatever. Say if it goes up 20% and then pulls back 5, 10% or whatever, and then I could catch a 10% move like that, or an 8% move, or so forth when I'm swing trading. So that's what I would be looking for as far as PayPal goes. Melly. Yeah, Melly is a little too all over the place for me right now. So there's a little trend right here that's kind of been following, and then we just see a kind of a snapback rally right here. And it was a very aggressive move from this low to here in the last 3 days. So I don't establish a new position up here. If anything, you'd want to see it kind of consolidate and get back above the... I mean, it's even below this declining 50. It's pretty significant downtrend here in the short term and medium term, meaning the 20 and the 50. And then we're kind of trying to recoup back up into the 200.
Ahead of the close of cross cash equity trade in Europe. The DAX is
even if it were to come up, I'd still want to see it kind of chop around and consolidate.
Euro stock's down 0.5%.
Intel had a, not a great look for earnings, but going into earnings for Intel here too as well, a lot of sell side. So yeah, to eventually see some sort of snapback move in Intel probably would make sense here too. Let me remove some of this stuff. But right now, what are we doing? So we have this bearish earnings gap, right? And when we have bearish earnings gap, just like I said before, you have a strong move, just like a power earnings gap, you can get price to pull back up on lower volume, and then just be careful because you can have follow through to the downside. People look to sell into that if they start making their money back a little bit. Just think of it in terms of kind of like if you got hit this hard in a price and it starts coming back to where your entry price was, are you thinking like, hey, I'm just going to get out of this, or do you think it's going to go much higher? Right? After being stuck in a position down for so long, a lot of people potentially look, it leaves an area for there to be supply and for people to dump into it. So right now you have price action, a big move to the downside, and now it's just contracting. It's literally just going sideways right here. Trading within the prior day's candle.
Front month copper. You continue to see some sporadic volatility in other futures markets. Cocoa futures down more than 10% today. So some marijuana stocks that they have been looking a little bit sharper, a little bit better here. If you look at weekly time frames, right, they've been going sideways. You're getting a lot of volume. Are we moving into potentially, from a decline phase to accumulation to an eventual markup? And I think that it's a possibility. If you play individual names, just be prepared for volatility, right? Volatility is absolutely crazy in these individual names.
but you got a huge volume rise up there on the weekly time frame, even the daily time frame, huge volume, right? As price action pulled down, what do you notice? Volume drying up. And then when it starts breaking out again, what do you see? Volume coming back in. So now price action's kind of going sideways. Not the greatest looking candle over here, but price action's kind of consolidating that recent move. If you want to like a little bit less volatility, you can look at, I mean, which are still a lot of volatility. You can look at ETFs like MJ, right? We're putting in higher lows. We're back above the 200-day. We're back above the 50. It kind of looks like a little bit of a bear flag here, but it's in more of a bullish, shorter term trend there. And then you have MSOS too. And MSOS has been pretty good. So MSOS, I'd say I'd like to see this little trend break. So you can see price action tightening right here, right? So it came down here, broke this trend up. And now you see how price action's kind of wedging here. So this is one I'd watch. You have an inside trading day currently right now. So I'd say be patient. You got to see if it breaks and you start to see strength. That could be an opportunity right there. And if you zoom out a little bit, I mean, you're looking, you know, roughly you get this area of supply
here just after momentarily
kind of in this area.
Results of the 13 and 26 week, 3 and 6 month
low, higher low, higher low. If we start breaking out,
piece.
It could be another higher low. And it could take a while, right? It takes a while sometimes for these to break out. I had to trade DIY over and over again just to finally catch this breakout. And then, you know, made 20+% on the move. But it took a while to get there. And managing the trade, right? Managing the trade multiple different times. You want to take a look at gold? Yeah, we can take a look at gold. Gold's been on a monster move, catching a lot of attention. I think now you want to be a little bit more careful when gold's way up here. I'm looking at gold futures. Let me make sure that I adjust for the contract changes. And I don't want to show the contract change events. There we go.
Codelco saying they're still in
So
lithium
gold,
talks with SQM before the end of May deadline.
I can pull up GLD, but I'm just going to pull up gold futures.
3-month bills dropped 5.250% with 42.75%.
All right, so we're getting some auctions right now. So let's just watch the price action here really quick
2.67.
on the S&P 500. It's been just a slow kind of drain down
6-month
lower.
bills
And
dropped
now we're going to get some potential volatility here
with
with
43.23% allotted at the high and a bid to cover 2.98.
Market net flow going into this has been bearish. So the dealer, if you're like not trying to fight dealers, it would be to the downside. You have bearish divergence there on the cumulative net premiums for calls and puts, and you have convergence that's red. So you would expect price to kind of sink in, but we'll see how the market digests that information, and we'll pull back up to gold. Hey, good morning, 69 Conquer. Hey, what's up? My thoughts for you. Long time. Jalen's saying that Beyond is bouncing off of bouncing. All right, so the market's kind of just digesting that. Yeah, gold. I mean, gold is still. Gold to me it's a very weird asset. You would think that, you know, the Fed stepping in after the pandemic and just blowing through the roof with quantitative easing, gold would have a huge effect. It didn't really go anywhere. All right. You'd think with all the geopolitical stuff that's been going on, Russia, Ukraine, gold didn't really go anywhere. Okay. Now gold all of a sudden is spiking out. This could be more geopolitical tensions. It could be all kinds of different things. It could be China. It could be China's, the economy in China. Maybe people are looking to put their money into some more of a safe haven because the economy is kind of crumbling, really led by the real estate sector. It could be in other areas like that where people are just looking for more of safe havens, and maybe that's why we're seeing gold rise. It's so hard to find a narrative to it, so we got to just use our technicals. And I mean, gold. I mean, you see it clear as day, right? We got very tight and we broke out. We flagged. We consolidated, and that consolidation led to another move. All assets, right? They move between expansion and contraction, right? Whether that in all patterns. Go through this. It doesn't need to be a flag pattern. It could be a wedge pattern. It could be a rising wedge pattern. It could be a head and shoulder pattern. That's all periods of contraction. All of that. It's just noticing when they're contracting. Now, when I see this, you have this expansion move to the downside. Now you're contracting again. Now this could be considered a bear flag or bearish in nature, but understand just because it's a bear flag doesn't mean that it's necessarily that bearish, right? You would need continuation. It's a continuation pattern, and it's actually in bullish context, right? Just like a bull flag, right? It's much more bullish in bullish context, right? We called this one out, and this thing just ripped and just kept on going and going and going. And now we're seeing price action kind of move how it's moving. And these could be very sensitive to rates. They can be very sensitive, obviously, to the dollar. So if you pull up the dollar, what's the dollar doing? Look at the dollar today. This right here, these are the warning signs for the market. Look at the dollar today. And if you don't believe me, take a look here. I'll pull up my market view. Okay, look at. All right, it's gonna be hard to see. It is what it is. Let me read you through it. So look at week to date and look at month to. Just look at month to date. Let me fix it. Okay, see all this red here? That's assets that are down from a month to date perspective. And now there's green assets that are in the green. So I'm gonna move these up to the top. And what do you notice? It's copper, it's the 10-year yield, silver, gold, energy, and the dollar. So the reason why I'm saying this is because when you have the yields up, right? When you have the dollar up, first off, when you have yields up, like the 10-year yield we use as the example, there's a tight correlation between oil and the 10-year yield. So when the 10-year yield's rising or when oil's rising, typically that means you have inflationary pressures, right? And you have yields rise with that. And not only that, you have copper that's been on a monster move, inflationary, right? And the Fed's trying to fight inflation. So you have 10-year yield up, copper up, right? And then the dollar on top of that. Now, when you have that all take place, look at, this is green and everything's putting pressure on, as far as a month-to-date perspective goes, into the red. All right, why is that important? Well, because if you're looking now at the dollar from an absolute perspective, right? If you're looking at the dollar from an absolute perspective, let me bring it back up. It's just a bullish consolidation right here. So if the dollar is going to start breaking out higher, that right there, it could very well put pressure on gold because, for example, like gold, right, is the opposite of this, right? So on the dollar breakout here, what did gold do? Broke down, right? And now it's flagging, more bearishly. I will say gold has been holding up very well despite that, right, strong dollar. And it is a strong dollar for this year because if you're looking at it from a year-to-date perspective, we're basically a day separated from the all-time high. A few days, right? But we're not far from as far as price action goes. So bullish consolidation in the dollar. If the dollar wants to break from here and start heading up higher, it's going to put pressure on the markets. It just is what it is. That's how it's been. The correlation comes and it goes and it comes and it goes. But right now, there's a pretty strong negative correlation. All right, so let's take a 10-year yield. And I'll show you that one now. We're 2 days separated from the high for the year. It's coming off today, which probably is helping alleviate some pressure in markets. But overall, I mean, it's just going sideways here. Now, I don't know if there's that much more upside in a 10-year. Maybe it does go up back to 5% up in these areas. But I don't know how much more higher it's going to be taken. We'll see. But right now, it's just nice bullish consolidation here too. So if you're bullish these markets, I mean, I would expect that you would want these assets to cool off a little bit here. Yeah, Qs are coming in a little bit. So this is what I meant by the bearish divergence in market net flow. If you're trading with the dealers, right, and then you have this red, this is not something that I'd try to buy dips on, right? If it turned gray, then maybe I'd look for the counter trend move. But right now, you'd be fighting the market. You'd be fighting dealers. All right, the flow is to the downside right now, selling into selling. Right, bounces they'll sell into. That's what this looks like. And that could change, right? This can start waning out and turn gray again. You typically get a lot of chop in these areas, right? So it came, like you can see, right? It came in a little bit. It is what it is. Sitting not too far off the lows of day, and we've been under the first opening range for all day, right? The 30-second opening range. So I'm personally not looking to execute into today yet. We can look at some more individual names. GDX was one of them. So, and the S&P 500 is roughly at the lows of day. Hey, Ashar, it's Trade the News. Asking about the person talking in the background. It's a live news feed that I have. It's right here. Why does it say disconnected?
You're listening to Trade the News.
There it goes.
So seeing a report out of Argentina that soy crushers going on strike in protest of a bill from President Milei.
So SPY is roughly flat on the day, up slightly. It's coming in a little bit here. Like I said, this is it literally chop right back up. Right now, looking at market net flow, right? It's telling us more bearish, potentially more downside, unless if it changes. But it's really just a choppy day. It's a choppy day as we kind of at why? What? Because we're awaiting some big macro data, like Tuesday. I mean, not crazy too much. Maybe Chicago PMI about 15 minutes after the open, and consumer confidence. Okay, everyone's hanging on like a thread when these things come out too. So I don't want to say that they shouldn't have that big of a market impact. But if you're trading intraday, they sure as heck do. Eventually, both TNX and SPX will go down together once it's clear in economic trouble.
These are D.
Yeah, you're going to have, and you can watch when those
Q1
correlations happen in real time. So,
133
like, for
million
example,
euro.
I can come out. Whoa. Okay, I'm back. I could come out here and I could look at SPX and long-term treasury yield with the correlation. Okay. Let this load up. And when I look at the S&P 500 in long-term yields, right, this is a correlation chart, right? And I'm looking at 10-day and 30-day. You can see when they go positive, when there's no correlation. And right now, there's not really a crazy correlation. Like, there's a little negative correlation. And most of the time, it does spend in negative, correlated state. You get sometimes positive. So if they're both going to go down, you're going to see these things spike up, which it's been there before in the 10-day. And you can watch that in real time when it plays out, and then you adjust to those market conditions when they're taking place. Give me a second here. Okay. And another interesting chart that I shared on another episode was, if you look at long-term yields correlated to the VIX, there's actually a pretty strong positive correlation, right? Even getting more positive. So this is telling me that, hey, if long-term yields start to rise up from where they are, expect more volatility in S&P 500 volatility land, right? All right, we'll take a look at some zero-date levels, see if anything's changed from a zero-date perspective here. Still a lot of concentration at 51.25, 51.30. That's right up here, and you can see we kind of held that as resistance. If we're going to hold that as the call wall, I mean, it's always possible that we float right back up into those areas. No, don't rule it out. Looking at market net flow still remains, has to update, but still that bearish, still divergence, bearish convergence. Not a real edge here in today's market. So I'm going to pull up some of the individual names that I'm looking at.
And Paramount seeing a report that Skydance has reportedly offered Paramount $3 billion cash infusion to help sweeten the deal. Pop out for Romeo Alpha.
Boop, boop, ba-doo, ba-doo. Ba-doo, ba-doo. Ba-doo, boop, ba-doo, ba-doo. Ba-doo, boop, ba-doo, ba-doo. I like Nog. It just kind of went far and fast, so I'm going to give a pause to that one. Sprouts getting some nice continuation and follow through from that breakout. Not going to chase into that. Some financial names that look pretty decent. Even some oil names look pretty good. West is getting pretty tight right now. Potentially retargeting that up swing high over there. With that said, let me see what oil looks like today. It's down about 1%, coming down. Look at this trend line. It just keeps on kind of hidden into this trend right here. Look at Trox. Also just another strong name, kind of consolidating up here. And then I was interested in Rex, see if that took off today. Okay, good, it didn't. Rex had a pretty large earnings move right here, and this is what I mean by powerful earnings gaps. You can watch these and look for the consolidations, and we're kind of getting that consolidation. It's kind of going sideways. So if we start breaking back above the high here, you can go retarget $60, you know, for the swing high, or get some more follow through to the upside. And price is getting pretty tight here. So I don't run and jump into these names. I would like to see this strength kind of occur. We saw some strength the prior day, but now we're kind of just consolidating, going sideways there. So that would be on the radar. Cintas is another one that had a nice earnings gap. Boom. And now it's also consolidating sideways here, getting pretty tight. So I'd look for strength through this one to potentially retarget its high. If strength doesn't come, I don't get in. Then there's been some names that got really beaten down, and I've been kind of watching those that have been kind of really good, but you know, they gotten kind of smashed. They're coming into earnings, so it's going to be interesting to see how these play out. Like Monster was one of them, BYON, Beyond. This one's still kind of selling off, going to the downside. But it is coming into a prior area where we saw some support, and we have earnings not too far around the corner here. So when I look at this, I'm like, dang, this thing has been kind of just a strong ticket to the downside. Perhaps it's going to open the door to a pop here very soon. You got to be a little bit more tactical and, you know, aggressive on these type of moves. We did the same thing with Lulu, right? So Lulu, right, very aggressive move to the downside and played a breakout. Now it's kind of just consolidating. It's holding up rather well there. I don't have a position anymore. I just played it for a little move there. FDX saw a nice breakout. It's still holding above a rising 50 and a 200, and now it's kind of just consolidating, chopping around here. It's not a horrible look. I mean, if you look at, like, you know, similar structures, like look at Dell, kind of did this same thing. You had this kind of wedge pattern. It broke out and kind of pulled in, and then, you know, it made another run. Now it's kind of consolidating here again and holding up rather well. Target. I think this is an interesting trend to watch on Target. This one right here. So Target's earnings gap was right here, and then I played it through here to the swing high over here. And then now what I'm seeing is after this move, right, it's consolidating, it's digesting. Volume is, it's kind of drying up, but you're seeing some, you know, big down days, big red volume. So you'd really want to see this start to turn back up if you're bullish, reclaim that 50-day, and then maybe watch that trend line. I think that can potentially create some sort of an opportunity there. Right, it's clear as day that we get, you know, hit from it, hit from it, hit from it, hit from it again. So if we start breaking above it, that could potentially lead to something bigger. A lot of people have been talking about Hood, and Hood's also holding up rather well over here. Volume's really drying up, but you have earnings around the corner, so be mindful of that. And then Bitcoin still, you know, is holding up rather well, but we've been on a sell trigger here for a minute on the sailor to shift tool. So let's get an update on that. I'm gonna pull up the sailor to shift tool right now. A great different corner. Yeah, cool. I'll pull some of those names up. Thanks. So here's the sailor to shift tool, and you can still see, I mean, we've been on a sell signal. It did a sell signal, a few weeks back, but then we got our official trigger like the following week, and we've been kind of just drifting lower. Still, it gave us some insight, and we are lower from the sell trigger. So I'd like to see, I mean, it doesn't even look it doesn't look that bearish, right? I mean, on the weekly time frame, looking at a log chart, you can mix things however you want to mix them and make them look how you want to make them look. But the way I'm looking at this right now, it's kind of just flagging sideways. So who knows if this thing is going to go ripping again. But, while it's down here, I'm always proceeding with more caution. And the reason why is because, I mean, look throughout the history of this. When the rate of change crosses, a Bitcoin and gold goes negative, you get a signal. And then the trigger, right? If you watch the video, I go over what the trigger is. It's caught every big dip.
Of its own
There's been a lot of
whipsaws,
whipsaws, like this one right here, and this one right here. But look at it, caught this move to the upside, it caught this move to the upside, and then I gotta add the red line over here, but it also protected us right here. Or whatever, yeah, right here on this week. Boom. And then it's slightly lower from that. So if this starts turning back up again, shoot, I'm ready to hit it. It's just not there yet. Was Reddit the buy of the year? I don't know if I heard that. I didn't hear that at all. I mean, maybe if you're like listening to like Kathy Wood, maybe. I don't know. I don't know anything about Reddit. IPO'd, right, or whatever, and then we're seeing some strength right here. This thing like shot up and it's coming back in though. Well, yeah, I'm not much of I don't really know anything about it. Okay, let's take a look at, Roku looked really good on the earnings report, and then it kind of completely reversed on the earnings call, I think it was. It was looking really strong. It almost came up to its upper earnings expected move. It almost came all the way up here, actually. It was not even far off, and then it completely reversed on itself after that. I don't see a trade right now in this. It'd be kind of like one of those like, hey, you go long, maybe it goes up, but I wouldn't want to short down here either. Like, cause sometimes when these things snap, they can snap up like very quickly. So it's obviously it's a downtrend. So if I am going to trade this stuff, what I do is if I don't see it on the daily time frame, if I don't see a setup, I can go into the 15-minute time frame and trade it just a different time frame. So like, for example, like you see, closing low here, a little closing low there. That's a positive divergence. You moved up, and now it's kind of just consolidating, pulling back, maybe into and around the point of control for the last 10 days. But it's also getting hung up at the 5-day moving average. So, if we move up and we start breaking through this high, it gives us an idea for a potential stop, or maybe, 50% of the stop up here, 50% of the stop down here. And then you update it if on new swing, swing highs or swing, if it wants to continue to go up. It was Weeble news. Oh, that's funny. That's funny. Penn. Man, I haven't heard Penn for a while either. Yeah, Penn's just kind of just hammered. Need Dave Portnoy to come back out here and say that he's investing another $10 million into it or something like that. And see the stock price go up 18% in the aftermarket session. Davey Day Trader is back at it again. I mean, I like DKNG better, right? If I look at DKNG, right, this one's been holding up. It's been going up for, a while longer. So if Penn is going to follow, right, that kind of falls within the same category if I'm familiar, if I remember correctly. But this one's also, in a more of a, an uptrend, getting a little bit more crazy and volatile up where we currently are, and we're running into earnings. But clearly it's showing some more relative strength versus the other one. So I don't know if you're like a long-term, like if you really believe in the company, maybe you can look at it as in like longer time frames, even though that those are still down. And if you want to get more tactical, you can go into the smaller time frames for shorter trades. Just know that there is a
more than 16% now for Tesla.
We have a earnings expected move here soon. Tesla's, man. Tesla's cranking. 16%. You know what that means. We got to get in our Cybertruck. Let's see what's going on over here. Let's drive over to Tesla chart. Yeah, Tesla's moving. What was the news here on Tesla? I didn't even catch it. Something about China? So we're seeing a good move there, up 16% on the day. If this is going to lead to something, I'd still wait for the consolidation and so forth. But these large moves also could be just short coverings, and also into like big areas of support. That's what we saw here on the weekly time frame. All right, weekly time frame from the pandemic low to here, right? Remember, came right into there, and we just saw a huge monster move. Is it something to do with full self-driving? Is that what they got approval for their full self-driving in China? Oh, okay. So I guess we'll see where that goes. You know what that turns into. I mean, that's pretty crazy move for that. I don't know. You look at the year to date and it's like, okay, it's down quite a bit, but we're coming back. These, I mean, strong, like big stocks like this, they're going to have snapback rallies. So where do you play to? And I would say just keep an eye on the upper trend line up here, the weekly time frame. I think it's possible. Shoot, why not? And then if it's really going to turn into something, I'd love to see a consolidation, then a break from that, and then that could turn into something big. But who knows? Definitely not going to chase. All right, what's the S&P 500 doing right now? Literally just going sideways, chopping around. I'd be open to a rip back. I'd be open to a fall again, like, right? Bearish divergence. You can see that the cumulative premium for calls are really sinking off here. And bearish convergence here. So I still wouldn't want to short it. Given the context of just the absolute perspective of this, I wouldn't want to short that. Like, look at it. It looks like it just dripped lower, and now it's kind of consolidating, showing the bull showing strength here. You can do that. It can sink right back down. Very, 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 very weird tape. This tape reminds me of a tape that is waiting news. All right. Let me see here. What else we got? PayPal. Yeah, PayPal looks like it's setting up to do something decent, but PayPal also has earnings, right? So we just talked about PayPal earnings expected move is roughly, what was it, 14 bucks or something like that? No, sorry, my bad. $5.89. So PayPal coming into earnings, I mean, you're looking at a high probability of tagging one of these expected moves. So I don't like trading into earnings. So I wait and see how it, sets up. I don't mind missing a move, 1 standard, 2 standard deviation move to the upside, because if it is that good, it's going to set up again for a lower risk, better reward type trade, versus a high risk, potentially high reward trade. I like low risk, high reward, not kind of high risk, high reward. You know what I'm saying? Yeah, I can take a look at TSM. Yeah, TSM, I see all this expansion and volatility. I mean, it's just, you can't really do much with this. You can just take a stab in the dark, or that's how I see it. You can take a stab in the dark, but it's just like boom, boom. And we haven't seen any digestion. It was consolidating, and then it just snapped and snapped back. Like, this is what happens in higher volatility, periods of higher volatility. So you can go into the smaller time frames and then play it from that perspective, because things do tighten up on the shorter time frames, and you're above a 5-day moving average. It's rising. You can look at these dips right here, and you're like, okay, now if I go long, respect it if it breaks or breaks trend, and this 5 days starts turning back around. So it's good to see this move right here, but we haven't really seen it come off at all. So if you are going to trade it, then you you can go into the smaller time frames. If it snaps it and breaks it, maybe it turns right back up and you could re-enter. Just, you've got to be a little bit more tactical to the approach there. I mean, Nvidia looks pretty good, right? So look at this one. It consolidated and then it just snapped back down and then snapped right back up.
Excel,
but it didn't fix anything.
POXEL, they're providing a fiscal update as well as first quarter financial results.
Nvidia right now is just consolidating sideways. Nvidia looks like the stronger one of the group. Right? You have this little breakout like type candle over here on good volume, and now we're just consolidating. So I like my idea here would be like, okay, if I'm trading, I'm going to look for a move above and through that, and then my stop loss, so tomorrow, right? And then my stop loss would be at the low here, and or at the low here. Just depends on where, you know, potential target would be. But I like the smaller risk. So if it breaks out, that's an inside trading candle that's breaking out. That's showing some strength. And if you go into the 15-minute time frame, you know, we're not like crazy far off from something like that to happen. Right? As it stands right now, we're kind of coming in a little bit. So who knows? For all we know, we can take out the low already today. So that's just how it's currently set up. And even if we take out this low, it would, you know, say if we come down lower, that would still be an inside trading candle. And I would still say the same thing applies, but then I'd have a stop, you know, lower down there. Tesla's now an AI company. ADM, Archer Daniels. Archer Daniels. Yeah, ADM, what is this reporting? When is this reporting? Tomorrow. So Archer Daniels, the most important thing here on Archer Daniels then is to look at the expected move. One standard deviation move, the implied move is $2.68 from where we currently are right now. It's about right to there. Okay, that would be the more important thing. Like I said, I don't trade into earnings. Now overall, the chart's, you know, in bearish context, but we're starting to see a little bit of a turnaround here in the medium term. The shorter term, it's kind of consolidating, and then we're in an overall downtrend. But that would be the expected move there for Archer Daniels. Hey, Ref. I just pulled up the Simulator Shift tool. The Simulator Shift tool is still on that sell signal. I'll pull it really quickly once again. Here it is right here. Still on a sell signal, sell trigger. All right, so we're starting to lose a little convergence here. So if it starts turning gray, maybe that leads us to that counter trend move. That means counter trend to what the market net flow is telling us, potentially to the upside.
Scheduling note. Use von der Leyen, French President Macron, and Chinese President Xi to meet in Paris on May 6th.
CCJ, Camco, looking pretty decent here too. It's kind of tightening up here on the right side. And it's been getting a lot of resistance, kind of supply up into this area. These ones trade a little bit funky, but I mean, it's holding up rather well over here. Potentially keep an eye on there for a breakout. You can go to the weekly time frame to kind of slow things down a little bit here. And you can see a pretty tight trading week. Pretty tight indeed. And when you get these tight little, I mean, right, today's Monday, right? But when if it remains tight, you can get a pretty explosive move from those. But if we're going to get continuation, you can have a stop at the low of the week, and then you potentially play a breakout. But I'd still give us a little bit of time here. SoFi, yeah, we can pull up SoFi. SoFi, didn't they report earnings today? Right? Yeah, they did. Or did they? Yeah, they did. Okay. I'm not a big fan here of the look of the chart. I mean, not a great look here so far for earnings. And then if I look at the weekly time frame, I mean, it's below these averages, below the 10 week, below the 30, below the, they're all kind of trending down here. And you kind of see it's kind of just walking a thin line here. You see this high, a lower high, a lower high, a lower high. It's kind of like just walking a plank. So if this thing gets cracked and we get continuation, even if it bounces up and we get continuation to the downside, I mean, we could retest these lows down here. If you're bullish SoFi, then I would say you really want to see this turn around quick, right? Maybe reclaim the prior week high. It's a possibility. You can look at it like this, right? So you see what I'm saying? You'd really want this to start recovering here. I could do it. There's so many different paths I can potentially take, but I wouldn't execute into that. Hey, what's up, Matt? What's going on, man? Baby's doing pretty good. Yeah, I had to deal with some weird stuff these last couple of weeks between the baby health and then health insurance on top of that, but it seems like it's all resolved. Thanks for tuning in, dude. I'm going to be getting off here, actually, on the live stream here in just a moment. Got a place to be at 10 o'clock. I'm sore. I woke up. I was at the gym at 6 a.m. today. Oh, brother. Oh, brother, man. Falling apart. I played pickleball for the first time the day prior. I'm a pickleball guy now. I'm going to talk about it to everybody. All right, so the SPY is following through on these little hammer candles over here to the upside. And we did lose convergence over here, so we can have those counter trend type of moves. Not really a good edge over here on market net flow land, but when you have a bearish divergence and you lose convergence, you can have kind of a counter move, and that's kind of what we're seeing right now. Okay. Hey, thanks, Ijan. As far as the 0 date land goes, we're going to go back over to here and just point out once again, 51.25. It's kind of been that key level that the market's been focused in on. I wouldn't be shocked to see it right back up at 51.25. All right. It's kind of chopping around. NQ is below its opening range, the first 30-second opening range. It's been drifting up. And then when volatility comes in, you could just, see these kind of quick snaps. It's a choppy market, people.
ECT in Paris, France, revenue coming in at $911 million in Q1 versus $899 previously. They're also affirming their full-year outlook.
What's up, Gio? Oh, all right, y'all. I'm gonna cut the stream right there. I'll try to put out a market brief here in a little bit later, just to reiterate some of these thoughts on the market and some interesting takes. Be careful, be safe out there. We went over quite a bit today. And just be aware that we do have a lot of macro drops, and we also have, obviously, a lot of earnings on deck that can really shake things up in the market. Overall, we're back above the rising 5-day moving average. That is bullish, right? And then we're also in positive gamma territory. And that, my friends, it's 50.90 is the marker there. Where is it at? 50.90. Here we go. Let me go there. Right above this gamma flip line over here. Also bullish. So this is where dealers look to buy the dip, sell the rip, buy the dip, sell the rip. So right now, this is the kind of conditions that I like for swing trading. I know there's a lot of unknown coming up, but these are the proper conditions. Just take into consideration the events that are around the corner and obviously being in the heat of earnings season. That's all I got for you on today's episode, everybody. Thanks for tuning in. Appreciate y'all being here and showing some love. See you later. See you 69. See you FT. See you Daijan. See you Ref. See you Mike. See you My Thoughts for You. Colby, everybody over there.